Good morning, everyone. My name is Patrick Wilkinson here with Nakar at Carlisle Realty and Lending. We're going to go over some basic information about mortgage loans 101. A lot of people get really nervous when purchasing a house. This is going to be the biggest investment that you're going to have, unless you're a business owner, of course. So the three basic things that we're going to go over today, one is going to be credit or credit score. One is going to be employment or income history. And then the other one is going to be your down payment. These three factors play a major role when doing a mortgage loan or any type of loan out there, as we're probably all aware. And it's just like a fingerprint. I'm going to give you some general information on this stuff, and then from that point on, give you food for thought, so to speak. And then at that point, you know exactly what to do when purchasing a house. So first one we'll go over is going to be your credit score. Credit scores can range anywhere from 400 to 850. Where you really want to be in the home buying purchase is the higher the better score, the better is what it comes down to. The average credit score out there, they say, is around a 680. We can fortunately do a loan these days with a 500 credit score. We'll go a little bit more into detail in a later presentation on that. Where you want to be is really a 640, 680, somewhere in between there. That's a really good credit score. Now, if you don't have those credit scores, what we recommend doing is, one, calling an agency requesting a copy of your credit report, not just a credit monitoring service. Those scores are very inaccurate. In fact, of the three major credit bureaus that we use, Experian, TransUnion, and Equifax, they have about 50 different formulas each, and they all reflect a different credit score. So in reality, you want some professional help. By no means are we credit professionals here, but we deal with it on a day-to-day basis. Because of this, we can give you some sound advice. If your credit score is below the 640 or 660, 680, then we can set you up for success purchasing a house 6 months, 12 months down the road. Or we can get you into a house that time. We just require a little bit more down payment, most likely. So that's very, very much the general scenario of a credit report there and credit scores. Let's go into down payment. So lending is a risk-based industry. What that basically means is they're going to weigh the odds based off certain categories. One of those categories, again, is down payment. The more you put down, normally the better rate and cost associated to that rate you're going to get. We can do a loan today, literally, with almost zero out-of-pocket cost. It's really scary. We're back to the old days, and because of property market and values and high demand, it allows us to put you into a property with minimal down. Of course, credit scores do reflect that. Interest rates are reflected by less that you put down. So the rule of thumb that they say out there, they want 20% down, that's not true. Again, talk to a professional, get some advice, call us. That's all we got to say. There's so many different variances that play a role in purchasing a house. Can we get you into a house? Yes, but the interest rate is going to be a little bit higher if you put less than 20% down, most likely, or the cost to get that rate. And that's something that people don't understand either, is the more you put down or the less you put down can vary not only the rate but also the cost associated to that rate. And then the last thing that we're going to go over is employment history. One of the biggest misconceptions is that you have to be in the same career field for 2 years. That is actually inaccurate. Lenders and banks have changed the guidelines over the previous years, and we can actually get you in fresh out of college. Believe it or not, as long as you have an offer letter with a start date and the amount that you're going to be making and it's accepted, we can probably get you into a house, most likely. Again, other variables playing a role here, down payment and credit score, but it's a huge misconception that we definitely need 2 years of history in the same career field and all that. Basically what it comes down to, as long as you got decent income, you got a decent credit score, and you have minimal reasonable amount of down payment, then we can get you into a property. Now again, this is just a brief basic 101 overview of doing loans. Again, every loan is different. It's like a fingerprint on your hand. I mean, every person's situation is going to be different. So lenders out there, there's a multitude of different lenders and banks out there will accept certain situations. Give us a call. Let's run through your credit. Let's run through your income. Let's run through your assets, your down payment, what you're comfortable with, your monthly payment. And then from that point on, we can look into either purchasing a house today, get you in the house sooner versus later, or we can set you up on a structured plan to where we can increase your credit scores, work on that job situation, work on your down payment, or all the above, and 6 months to 12 months down the road, get that dream house for you. I want to thank you guys for watching this. Again, my name is Patrick Wilkinson from Carlisle Realty and Lending here with Nakar. And you guys have a wonderful weekend. Thank you.